Hi everyone, welcome back to Beerish Podcast. In this session, we are going to discuss about the standalone and consolidated financial statement of Tata Motors. So, when looking at the annual report, I started reading the financial statement like profit and loss statement, balance sheet, and all. So, it is running for more than 50 pages in the Tata Motors annual report. So, as a beginner investor, how to read the nuances and read the important details of financial statements.
You were reading Tata Motors.
Yeah.
And when you read Tata Motors, you found
Consolidated financial statement.
consolidated financial statement, standalone.
Standalone financial statement.
I'm sure you would have researched what standalone is and consolidated is.
Yeah.
I know you're good enough to do that. You would have immediately gone to Google and said, what is standalone and what is standalone?
The main business of Tata Motors, that is standalone.
Okay. Then consolidated?
All the business like commercial, passenger vehicle, Jaguar, Land Rover. It is
So if I remove passenger, commercial and Jaguar Land Rover, what is there in Tata Motors?
That's what my confusion is there.
Okay, I clarified.
Yes, sir.
It is like studying this flat which we're in. Standalone is each house as a unit.
Okay.
Consolidated is a complete building. Right. So in Tata Motors, there are many subsidiaries. Right?
Yeah.
One of the famous subsidiaries is which one?
JLR.
Correct. There's another one which they want to remove from Tata Motors.
Tata Capital.
Correct. They're all subsidiaries.
Yes.
They're all inside Tata Motors. But they're separate companies within Tata Motors. They have their own head. They have their own balance sheets. Everything is separate. So when you look at standalone, it's only Tata Motors without these subsidiaries. That is called standalone. Consolidated is this plus this plus this plus this plus this all put together.
So for
as a financial statement.
They'll take JLR, passenger and...
No. Standalone will not have all that. It will only be Tata Motors. Consolidated will have JLR, it will have Tata Capital, it will have any of these single subsidiary. Passenger is not a subsidiary of Tata Motors. Passenger is the main business of Tata Motors.
Okay.
Commercial is the main business. So they want to split it into two is because they're both inside Tata Motors. They're the heart of Tata Motors. So you're confusing. So you can see what other businesses are there. If you look into the balance sheet, you'll see it.
Yeah.
These are the subsidiaries of Tata Motors. So study that. The question what you will be wondering is, as a value investor, what do I look at?
Yeah.
Correct? As a value investor, you first look at consolidated.
Okay.
First, consolidated tells you the complete picture. So in that, especially in Tata Motors, you'll see how much is JLR contributing, how much is Tata Capital contributing, is one dependent on the other, is they taking too much money away from the parent company, or is the parent company taking too much money away from this?
Okay.
All that you'll be able to see and understand. After you understand that, then you can look at standalone. But the first thing you should look at is consolidated balance sheet.
Okay.
That will give you the complete picture. This is in case of Tata Motors, you can see that. Anand goes one step further and says, don't bother looking at standalone. If you want to look at standalone, you can look at standalone. That is to understand how the subsidiaries are impacting the parent company. You can see in the consolidated. What are the question here?
So it is running for more than 50 pages. I got interest to read that. What are the important things which one should see?
Well, there are very important metrics in the balance sheet. One is debt, profitability, asset utilization, capital utilization. Then you can see how each subsidiary is valued inside the company.
Okay.
So if they want to float off JLR as a separate company, you'll know, okay, if they want to float it off, this is the value of this company. All this is there inside the financial statement. If you go and look into it, you have to deep dive. Like you said, it has 50 pages. So you have to go through each page and read it. If you want that information, it's all there. But you will have to sit and read it, not only read it, and also understand it. But then again, this alone will not be something that can make you invest into a company. So this is only important as far as, let's say, you look at a new company. Because Tata Motors is a separate issue. Leave that. Let's say you find a new company which we're talking about, which you are being interested in investing. So after looking at the PE and all that, you want to go see the balance sheet. Right? You see there's little debt, no debt, whatever, and you've seen PE looks nice. You understand the business, then you open the balance sheet. So when you open the balance sheet, you look at consolidated balance sheet. Because when you look at the consolidated balance sheet, you'll know what is the liability, what is causing this liability, meaning what are the short-term borrowings, long-term borrowings, right? What are the short-term assets, what are long-term assets, what is, let's say, especially if it's a company which you've been seeing and they bought over a new company. So then you'll see how this new company is coming to this company.
Yeah.
Right? Why did they buy it? All this analysis is there inside the balance sheet to understand. As far as Tata Motors balance sheet is concerned, it is a tried and tested company. So you reading 50 pages, you can read, right? But I won't advise you to read because it's too complicated and too much information is there packed into that because it's a huge company. And you will find it overwhelming to read.
Yeah. Over a point of time,
Correct.
There are lots of tables.
It's like you go find out your car is broken down, and then you go online and you find the service manual for the car and you download it, and then it'll be a 1,000-page document where it's talking about the engine and competence of the engine, and you will be looking at that PDF and you'll be like, oh my god.
Yeah.
And then you'll call the mechanic. Same way you look at the balance sheet, first 2 minutes you'll look at it, you'll try like this, like that, then you'll give up. Then you'll call up your friend Albin and say, Albin, what do you think about this, Albin? So, my advice would be, if you like to read balance sheet and you want to understand balance sheets, pick small companies, micro cap companies,
Okay.
right? Those will not have very complicated balance sheets, which are just operating in one small region or location or one city, and see that.
Okay.
Even better would be, there will be small trial balance sheets, okay, of proprietary companies, partnership, which are there online. And examples are there. You take those and read those first. That's like ABCD. Learning 1 + 1 is 2.
Straight away going to algebra.
Not even doing algebra, man. You're doing calculus.
Okay.
You're doing imaginary numbers.
Yes, understood.
Okay. You'll be like, wait, what is this? Numbers are not real?
Okay.
Okay. So, start at that. Then slowly build yourself up into reading this. But as far as a value investor goes, if you have to choose between reading standalone and consolidated, always read consolidated.
Okay.
If somebody is giving you information and they tell you that information is all coming from standalone, it is useless for you. Standalone balance sheet as a value investor is useless for you. You may ask why. Because we are investing in the complete company, right? When you move into a house, new house, you also look at the complete building, the area, everything, the roads leading to it. You just don't look inside the flat, okay? So imagine it's a very bad area. Roads are all terrible. Outside the building looks very filthy.
Okay.
There are cows and other animals tied to the gate. But you walk inside the broken lift, you open inside the door to your so-called flat, which you want to see is fabulous. Marble floor, 60-inch TV, beautiful sofa, but you'll still say no to it. Why? Because you'll have to approach all this.
Daily we have to see that.
Yes, and it's destroying your value of your property. So you will not want to rent it or buy it. Same way it applies to companies. So you take consolidated balance sheet always, and you ask anybody gives you information, you always say, is that from the consolidated balance sheet? They say there's no debt. Say, fabulous. Did you check the consolidated balance sheet or the standalone?
Okay.
And not all companies have standalone balance sheet and consolidated balance sheet. So a small microcap company, which is only doing one small business, will only have standalone balance sheet. It will not be separate consolidated. Only these huge companies have consolidated and standalone.
Okay. So I hope that this video was informative and you had some knowledge about which statement to look. So if you found this video useful, please share it with your friends whom you think it will be helpful for them. And if you want more kind of videos, subscribe to this channel and keep waiting for the updates. Thanks for watching the video.
Thank you.